Hi, it's Dan Moralez of First Place Bank. I get a ton of inquiries about refinancing a current mortgage. And I wanted to share with you some information about the Home Affordable Refinance Program. The Home Affordable Refinance Program is a program that was put out in early 2009 and made available by the Obama administration. The program has been tweaked and changed pretty consistently over the course of the last probably year here. The good part about that is as the program's been changed and tweaked, it's gotten better and better as far as the flexibility and the number of people that it's been able to assist and help in refinancing their mortgage. What I wanted to do is share with you some of the highlights of the program and how it could potentially benefit you. Probably the biggest and most important change that was made in the program was done this past summer when they opened up the opportunity to refinance your mortgage and have negative equity. And you can actually even have a pretty substantial portion of negative equity. What happens is your new mortgage balance can be as much as 125% of the appraised value of your home. So what that means to you is if you have a $100,000 mortgage on your property, you can have an appraisal as low as $80,000 and still be eligible to be able to refinance your mortgage. So in that case, as a homeowner who has $20,000 in negative equity, you still have the ability to refinance your mortgage even though, for all purposes, you're upside down, if you will. Again, the magic number there is the new mortgage cannot exceed 125% of the home's value. Now, as far as the options that are available to you, those options can vary largely depending on who the current holder of your mortgage is. Now, just because you make your payments to a certain company doesn't necessarily mean that they are the holder of that mortgage. In other words, if you make your mortgage payments to First Place Bank, doesn't necessarily mean that First Place Bank is the underlying holder of your mortgage. For most of us, our mortgages are held by Fannie Mae or Freddie Mac, who are the ultimate holders of those loans. Each one of those entities, whether it's Fannie or Freddie, has their own unique program in how they apply the home affordable refinance rules, if you will. You'll typically find that Fannie Mae's program is a little more flexible than the options that are available to folks who have a mortgage with Freddie Mac, but both are pretty close to each other and mirror each other pretty closely. The 125% rule applies to both. Whether you're a Freddie Mac or Fannie Mae loan, you can be as high as 125% of your current appraised value. Now, what happens is if your original mortgage was one where you did not have mortgage insurance, so your original loan was, in most cases 80% or lower of the appraised value or your purchase price, and you did not have mortgage insurance, you still have the ability to refinance that mortgage and not have to deal with mortgage insurance, all the way up to 125% of your home's value. So even if you went from 20% equity to now negative equity, you can still refinance your mortgage and avoid mortgage insurance. So don't let the fact that your home's value stop you from saving yourself some money. So negative equity, not necessarily a problem. Now, if you had a loan that had some form of mortgage insurance, if you had some form of PMI insurance as part of your loan, oftentimes folks did mortgages where they had what I like to call no PMI insurance. What they did is they had a higher interest rate instead of paying PMI insurance. Oftentimes what that was is what's known as a lender-paid mortgage insurance policy. So at the end of the day, you still had a mortgage insurance policy as part of your loan. It was just one that was paid for by the lender in exchange for a higher interest rate on your mortgage. What happens in those cases is if your new loan to value, in other words, if your new mortgage exceeds 105% of the value of your property, you are almost forced to go back to your current loan servicer. So in other words, if I made a mortgage to you at First Place and your original loan was for 100% of the purchase price, so you did no down payment, and you want to refinance your loan, but now your loan payments are being made to XYZ Bank. If your new loan to value, or in other words, your new loan is more than 105% of the current value of your property, and your original loan had mortgage insurance, you unfortunately would have to go back to XYZ company to refinance your mortgage. Now, if your new loan to value was less than 105%, even though your current mortgage is with XYZ, and even though your current mortgage has mortgage insurance, I still have the ability to service you here at First Place. If your original mortgage did not have mortgage insurance at all, irregardless of what your loan to value is, up to 125%, I'm able to assist you here at First Place as well. So those are a couple of the quick rules that apply. One of the big things is for folks who own investment property. If you own investment property and it's been financed by Fannie Mae or Freddie Mac, there is a cap to the fees that you would pay as part of investment property. And the same thing is true based on credit score and a number of other factors. Normally what happens is Fannie Mae and Freddie Mac have a series of fees that can be charged to you depending on what your interest rate is, your credit score, occupancy, and a number of those other factors. As part of this program, they put a cap in place to what those fees are. So for many folks, especially if you own investment property, it is a great opportunity to refinance, save yourself a ton of money, and just come out ahead when it's all said and done. But again, up to 125% negative equity, you can do in most cases as long as your loan is currently owned by Fannie Mae or Freddie Mac. In many cases, you have the ability to roll your closing costs into the mortgage. Now, there are some limitations of how much cost you can roll in depending on who the ultimate investor of your loan is. With Fannie Mae, there's a ton more flexibility than what you will find with Freddie Mac. One of the biggest things that we do is we determine, first of all, who currently holds your mortgage and what your options are that are available to you. But I just wanted to give you some quick information here. If you have an FHA mortgage or VA, VA has a fantastic refinance program. It is probably the easiest refinance program ever. There's pretty much almost nothing that needs to be done, and you can refinance your loan. If you have an FHA mortgage, FHA has a number of really good refinance programs. In particular, they offer a fantastic streamlined refinance program where in many cases you don't even have to have a new appraisal done. On the conventional loan options, in most cases, you still have to have a current appraisal done. There are some exceptions to that rule that may be available to you. There are also some exceptions in the case where First Place is your current mortgage servicer, where their documentation requirements are significantly reduced. So if you're looking at refinancing your home, there are a ton of options available to you. The biggest thing is to try to figure out what your options are. And the best way to do that is by picking up the phone and giving us a call. And my team and I are happy to help you out and help you figure out what your options would be and what your costs would be. What are my costs versus what are my savings? How fast does it take me to break back or break even what I'm paying to do the transaction? In some cases, believe it or not, you can even still do some no closing cost refinance loans. Some of those options work best for folks who have larger loan balances. We're able to refinance your mortgage and pay very little in closing cost, and oftentimes you're able to decrease your interest rate at the same time. So again, thank you for taking the time to watch the video. If we can be of assistance to you, if you're looking to refinance your mortgage, or if you have additional questions about whether or not your loan would be eligible under the Home Affordable Refinance Program, feel free to contact us. We're here to help you. I'd like to remind you that if you are, and you do have the ability to continue to make a monthly payment, you would not be eligible under the Home Affordable Modification Program. The modification program that you hear a lot about on the news is a program that is really meant for distressed homeowners who do not have the ability to refinance their mortgage. If you've got the ability to refinance your mortgage, that is the method that you've got to do. If you're a homeowner that is under distress and having difficulty making your payments, I strongly suggest to you that you watch the video that's on the page called Save Your Home. There's a ton of information there that will help you out on being able to save your property. Again, thanks for taking the time to stop by. If you have questions or concerns, let us know.